Hi members, it's Vinod here from Grow Wealth. Hope you're all right, keeping safe and healthy. This is the watch list review from last week, and also looking at the new list of stocks for the forthcoming weeks, starting from the 8th of February. It's been an interesting week last week, quite a lot of big winners. We will see that in a second. Hope you have made some use of it, looking at the charts and getting on the trades, and hopefully you're profitable as well as the watch list has been. Without further ado, let's move on. Right, so this is the last week watch list. As you could see, we had quite a few stocks on there. The overall bunch had performed really well, nearly 15% in just 1 week compared to S&P 500 of under 5%. We have 4 stocks in there that did double-digit returns. API, thankfully, it was a big start. Currently, it's doing really well. It's over 100 now. So that was a big winner, 75%. And you can see how the rest have performed. The market is really good. I put in our group as well that it's a bit frothy. A lot of people are making money, which is good. We are also making money. But it is getting really too easy to make money. And that is always a sign of topping for the market. So stay cautious, have a trade plan, adjust your stop loss. If you have good size wins, profits, book partial profits, so you get some money off the table, and also adjust the stop loss so you kind of protect your capital. Well, that should be the first thing to do. Okay, so let's look at how the charts have performed for this last week's watch list. Let us start by looking at the index. So this is the S&P 500 index. As you can see, it is on a all-time high. Last week when we looked at it, it is on this red candlestick, touching the 50-day moving average. And then for the last 5 days, it's bounced off really strongly. Not just recovered, but also went to all-time high. And that is quite a rapid increase. So we have to see, I mean, just by looking at the week that has finished performance, you would expect it to go up or sideways. If it does the opposite, that is an expectation breaker, in which case you kind of take a more cautious stance. Right now, it's all positive as it stands, but a bit extended. This is NASDAQ. Similarly, it kind of pushed up to all-time high. And this one is Dow Jones Index. It hasn't gone to the all-time high yet. It's kind of hit, it came very close to the previous high, but couldn't touch that yet, and possibly finding some resistance in there. So you would want to check how every day goes, particularly in this kind of exuberant market, because it could turn any time. It could go up as well, in which case you need to be on it to continue to make good returns. But also if it kind of reverses, then you need to be on the safer shore and not get blown over by the tide. Let's look at some of the stocks charts from our last week's watch list. So PGNY, it came back nicely using the line as a support and bouncing off, which is a good indicator. Let me see if I can bring some. Just 1 second. There you go. So these annotations are from previous weeks, and it's gone above that, close to the all-time high, and we would like it to see it perform really well, breaking above the all-time high in the future. Right, it has returned 6.7% last week. So it's kind of came back, found support at the T line, and then moved above, which is a good strong signal. The next one is Tdoc. So we continued to keep the stock in our watch list last week because it was at this level, the T line level, right? And then it shot up, going up closer to the all-time high now. So if it continues, it's like a J-hook pattern. So you can stay above as long as it is showing positive signs or staying above the T line as it is now. And Tdoc is the telemedicine sector, which is hot at the moment. So you are in the kind of a trendy sector, and this is one of the leaders in that sector. Next one is Halo. So the yellow bar here, you can actually extend it further, because if you go to the weekly, you could see it's very tight pattern there, gone up and going sideways, and it hasn't broken down at all. So this pink bar, pink box, was the previous week's stop loss, right? It hasn't come to that stop loss yet. It's kind of going sideways, seemingly finding some support at the T line and trying to go up. So it looks promising to me, and it's very likely to break out about this yellow box. I'll put it a little bit here. So if it breaks up about 50 or 49.75, it's a good indicator that it's kind of likely to resume an uptrend. Next one is Onam. This is one of a good winner last week, and it's an all-time high at the moment. It broke above the previous resistance. Nice strong action here. It's also on healthcare and a healthy kind of, it's a strong sector as well. If you can see on the weekly chart that it broke out of this top from July in January, and then it continues to go up. So there was a dodgy week and then a real strong week last week, and it seems like the dodgy is sandwiched between two strong bullish candle, which is a positive sign. So it's like a sandwiched dodgy sandwich, as it's called, and that is a positive sign. We finished with the dodgy on Friday. That means there is a little bit of indecision or a bit of a pause in trading sentiment. So you'd want to watch that, but it's a very strong chart. So if you're in it, you can continue to stay on that, I would think, but keep adjusting the stop loss as you go along. I would look for the price action patterns like below these two low, and also coinciding with just under the T line. So you can put a stop loss here. If you're doing a shorter term trading or medium or position trading, you may want to look for a stop loss below this low, which is a significant pivot point. Next chart is Yala, and this is one of the big winners. So this one went up 38% for us in the last week. So once it broke above this previous high, it retested that resistance, found some support on that level and also on the T line here, and then shot up quite suddenly within the last 5-6 days of trading days. So on Friday alone, it increased over 18%. Such a great stock. I haven't bought this one. I was on other names, so it wasn't something I managed to capture this. Hopefully some of you have managed that, but it's a great looking chart. On weekly, as you can see, it increased 38.4% in just 1 week since we added to our watch list. So if you look at this, if the market is healthy, if the market keeps going up, this is likely to go up as well, but it's a bit too extended right now for you to add a new position. If you aren't in the stock, please look for consolidation and a setup, maybe in a shorter time frame, like an hour or 4-hour chart. But looking at the daily chart, it looks really positive, but a bit extended too extended to open a new position. API, you would know from our last week watch list that I put a star next to this name, indicating that I was in that stock earlier. So this is one of my longer term position. I held it for many weeks and months, and I added to our watch list at the end of this day, and then the very next day, is that right? Yeah, on the very next day, it gapped up 30%. So it gapped up about this resistance, and it seems there were quite a lot of buy orders, which has shot it up to a real great height. And also there was another resistance, and people may have put some buy orders there, and that's the reason why it kind of gapped up so much. And it didn't pull back at all. So even if you had bought at this level, you would be sitting at a very handy profit. But of course, if you had bought it here, you need a good trade plan about stop loss, maybe at the end of the day, low of the day, and things like that. So this is a little bit extended, but it's a fantastic looking chart. It has just now broke above the IPO base, which again is a good point, for a good strong indication. And this stock also has great fundamentals in terms of revenues and sales. So that is why I held it in my investment long-term account, right? Even when it went down, I was able to hold it because of the good fundamentals. But the stock movement was also really great in the last couple of weeks for a trading setup. So if you want to get into this name, this is a little bit extended. You want to see if it pulls back or consolidates by going sideways and setting a new entry for you. Okay, so make use of these names that we come across in this watch list so that you can keep a track of it separately. I may or may not repeat some of these names in next week watch list, depending on whether it's giving a new entry, but that doesn't mean previously discussed stocks are not good, because things like API, I'm still holding this in my investment account, right? But I may not add this to our next week watch list because this is a bit too extended. I don't want to give a false impression that it is giving a new signal to enter. If you already entered it, it's great to continue on it, but perhaps take some partial profit, which I have done as well myself, because it's kind of shot up nearly 75% in 1 week. For me, it's gone beyond 100%, so I've taken some partial profit on that. If you want to enter it again, for the first time, look for new entry for it to stabilize a little bit. Maybe it comes down to the previous resistance to find some support, or T-line as support, or even going sideways where the T-line could catch that price action in the next few days and week. So that's how you trade these strong names. Futu. So Futu didn't, it did well as well. It's nearly 17% return despite this pullback in the last couple of days. But it recovered nicely, found some support at the T-line, and it's kind of bounced up with some support on T-line. So this looks fairly good. On the weekly, it's really extended. So if you can see that it's quite a lot extended, high volume. The shadow, the wick of both the weeks candle are quite tall and finding some kind of resistance around 130 mark. But if you look at the Friday candle, it came back to T-line and finding some supports there. So if the Monday opened around this level or above, this may be setting up a good entry point with a stop loss below the Friday level if you want to trade this name. ACCO did well for us. It gave nearly 8% return in the last week. So as you can see, on Thursday, it gapped above the previous resistance and went to all-time high. It's kind of slightly pulling back, likely to be profit-taking on earnings. So the earnings, does it show the earnings here? Earnings were good. That's why it gapped above the resistance, which is always a good sign when the earnings lead to positive gap up and break above the previous resistance. It's likely to kind of find a support in this level. You want a confirmation. That's what I'm expecting, but you want a confirmation. When that happens, if it cuts the previous day's lows and recover, when the red day become a green day, or in this case, a pink day becomes a blue day, that is a good indication that the buyers are coming in. So if you want to get into this name, that's what you look for: the support confirmation and a recovery candle for you to enter. And the low of that or below T-line could be your stop loss. QDAL. So QDAL, you might remember my comment from last week's watch list that there are lots of gaps in this chart, which is not very pretty. So this yellow gap here was filled when it came down quite violently on the 2nd of February. So it completely filled that gap up 3 days later. Itself is a positive sign, but looking at the bigger picture, it's still within this wedge pattern, the triangle kind of wedge pattern. You can see much more clearly in the weekly, right? So if you know this fundamental and want to absolutely have the stock, you can go for it. But there are quite a lot of other setups as well that you may be interested. So Piton, Peloton. So this had earnings on the 4th of February. The day prior to earnings, it increased 7%, and it reversed all of it the following day, almost all of it. But see what has happened on Friday. So it came back all the way down, almost close to 50 EMA, which is just above the previous resistance, and found a support and is giving us a pin bar. Although it is not above the T line yet, that seems to be 50 There was a problem with the recording. I don't know how much you heard me say about Peloton. I'll just briefly repeat it. So it had a good earnings. There was a sharp downward reversal on the chart on the earning after the earnings day, but it found support on 50 EMA. It seems to have reversed a little bit above that. It's still below the T line. The trend is there for the popularity is there for this stock. It's seemingly having supported this range. So if you want to buy this stock, you'd want to place a stop loss just around this level below the 50 EMA. But a confirmation would be to break above this declining blue dotted line, the declining trend line here. If it goes above convincingly and above that level, that is an added confirmation. The next one is Crsp. There are better charts, but this one is in great sector. So this is the Genomics Crisp technology. It came down violently after hitting an all-time high on January 15th, came to the 50-day EM moving average, found some support and went sideways. There is not much selling on great volume except this one day here on the 27th. But other than that, the selling days are on low volume, and there are buyers seemingly coming up now. So because it hasn't gone below the previous low here at 155, and the 50-day EMA seemingly acting as the support, and it's in the great sector, and the decline seems to be plateauing here. On Friday, it's given a kind of a pin bar, really positively at the top of the range, and that is a good signal. The volume is higher than the previous day's volume as well. It's not above average volume, but it's higher than the previous day volume. So based on that, I'm still continuing. I think I opened a small position on this, a bit aggressive position, see what happens. But a strong confirmatory close above T line would be good. But I have a position on this. So this is how the last week watchlist has performed. Let us look at the names for the forthcoming watchlist, forthcoming week's watchlist. So this is how the last week has done, and this is the list for the coming week. We got 12 stocks, and as you can see, 5 of them from last week. We just seen those charts now: PGNY, Tdoc, Halo, Crsp Technologies, Peloton. All are good sector as well, and I'm continuing to watch this and have some positions on that as well. The new ones are NEO, RKT, DCBO, Zoom, ZM, SEDG, TXG, DGT. There are a couple of solar sector here. So NEO is the electric vehicle. Sedge is on the solar sector as well. Recent IPO RKT, which also has high short float. So I've got a position in there. DCBO is a Canadian stock with high growth. Zoom has pulled back quite a lot after hitting all-time high last year. It was the darling of 2020, and it seems to be setting up a base and trying to go up. And it did go up quite a lot on Friday, which broke above that consolidation base. So it's kind of gave a confirmation signal on Friday. TGT target, which we had 2 weeks ago, and TXG is the 10x Genomics on the genomics sector. So let's look at the charts for those new stocks that has been added. So NEO. So you can see the kind of annotations from previous week. I've changed the red box and the pink box to I've updated that for this week. So there's a declining trend line. Electric vehicle EV sector stocks have been pulling down a little bit. It's going on a period of consolidation in the last couple of weeks, 2-3 weeks or so. And NEO, although it's pulled back from mid-January to now for the last month, see where it has kind of seemingly stopping. So it's right at the level of previous resistance from November, right? It hasn't completely broken down. When the price has come down from January, the volume has reduced as well. So there is not heavy selling. Not many people who hold these stocks are actually selling it. They are keeping hold of that, meaning that a lot of people who still have convictions in the stock, and it's likely to resume its uptrend sooner than later. And I anticipate maybe in the next few days or maybe in a week or two. So far, the last 2-3 weeks, this level has held as support. So if you want to get into this stock, this might be a good place for stop loss. Because of the downward trend line, this blue dotted line, a confirmation to buy would be somewhere here when it breaks above. If you're an aggressive trader, you could buy when it moves above this red bar, a red candle there. But it's useful to look for extra bit of confirmation in terms of high volume move and also break above that declining trend line. Next one is, did we see target? Yeah, so we saw this a couple of weeks ago where it broke down the following week. So we took it off somewhere here and it found support at 50 EMA and recovered quite nicely and went above the T line at this point. It's giving a kind of it's taking a bit of a pause. It's still within this bigger light green box, which is the 5% zone above the breakout. This is for medium position traders, medium-term traders. So it's still within that. So the 5% is a good indication not to chase the stock beyond that. But that depends on which type of trading you're doing. So this is for position trading, medium-term trading, based on IBD, investor business daily kind of techniques. So just going with our CT50 strategy, it's about T-line, and it found support at 50-day moving average, and it's likely to break above this box as well. It certainly broke above this declining blue trend line, and it's a good sector, good stock, long term as well. So you can probably look at a buy position here. If you're buying there, the stop loss could go there or below the 50-day moving average where the previous low was. The next one would be TXG, and this is 10x Genomics. ARK Investment is also buying this, which is a good indicator because a lot of people follow them and buy because they are buying. It's in genomics sector, which is understood to be the next blockbuster sector. So look for great companies and have some exposure in there. So you can see T-line is acting as a support in this one, and it came back to T-line after a doji day on Thursday and found some support, and buyers came pushed all the way to the top of the range when it closed on Friday, and the close is about the doji day here. So this is a good candle. So it signifies that the buyers have took control of the sellers and it's likely to open at this level or gap up, I assume. And if it breaks above that previous high from the 20th of January, that's added confirmation, but that's another $6 nearly. So that would be about 3-4%. So depending on how you want to play this, medium longer term, based on the sector, you can look into this even now, or if you want to try to get a bit aggressive and find an entry here with stop loss below the T line, we can also do that and see how it acts at the previous resistance and maybe take partial profit. If it breaks out significantly at that level, then you can continue to hold. So have a plan of how you want to trade it. Just short-term trade, medium or long-term trade for this name. The next one is Zoom. So this is what I mentioned. So it hit the all-time high on October 19th at $588. It came all the way down to 331 on this day, 12th of January. And since then, it's bounced back really nicely. So you can see it bounced back and found some resistance at 50 EMA, and then kind of consolidated to the sideways and it kind of hit between the 50 EMA and T line for a good few days, like a bubble. And then there's the breakout. So sometimes people call this as bubble breakout because it kind of stuck between those two and then pushed up on Friday at higher than average volume and good, strong, bullish candle, moving 7.59% on just one day. People might think it's a bit too extended because it moved like nearly 7.5% on one day, but look at the bigger picture, right? Yes, there are some resistance here and some resistance there, but the trend is there in terms of using Zoom. A lot of people are using it, working from home environment. Great company, fantastic earnings releases in the last many quarters. The earnings are coming up at the beginning of March, so you got another 2-3 weeks in this month to play before the earnings. If it moves up, then you will have a good buffer to then decide whether you want to hold through the earnings or book some partial profit or so. The ARC investment is also, I think, looking at buying this, if I'm not mistaken. So I've started a position in the stock on Friday when I noticed that it's breaking out. I wanted to buy it at close to 400, but I was a bit too late to notice it. So I bought around 413, somewhere here, close to the top. Right? And I feel fairly confident because it also broke this pattern here, right there. So 404, 405 resistance, it broke that. So I expect it to go up, or at least consolidate and then go up in the next few days. Another solar name is SEDG, Solar Edge Technologies. So this is a great company for long-term holding as well. It's done phenomenally well in 2020. And it is finding support at 50-day EMA and also T-line. So you can see T-line, 50-day caught up with each other. Price found some support at that level. And on Thursday, it tries to come down, but on Friday, buyers came back. Tries to go below 50-day, and then buyers push it up well above the T-line. So there's a small consolidation zone, the yellow zone here. And if it breaks above that, that's added confirmation. So I will be looking for it on Monday. If you want to keep a tight stop loss, you could place the stop loss just below the yellow box, which would be just below the 50 EMA. And you can play the trend there. It's likely to go. There's a small resistance there or previous all-time high. So those are the things that could, potential profit points. Next one is RKT. So I put a few profit points here. The green would be the potential. Sorry about that. There was a bit of a technical glitch there. I had to stop the sharing and come back. So I put some annotations here with green and red boxes. So what it signifies is potential 3 different ways to trade this stock, RKT, Rocket Companies. It's a relatively new IPO, came to market and beginning of August last year. It rocketed up, as the name suggests, from where it went down to 18 and moved up to 34 in a matter of a few days, and came all the way down to 17.7, and then it moved nowhere, just sideways. It's setting up really nicely. It's got higher short interest as well. That's how it caught my name. And I also recently found that it's got some good fundamentals behind it and growth expectations. So I started a position on this for a longer term investment as well. So there are three different levels here. So one is this resistance. The next one is based on the Fibonacci level right there. And also the next one is the previous all-time high, right here at 34.42. So depending on your time scale, your position sizing, you may want to trade it differently. I'm going for the bigger move with this stock. So I will be holding it in my investment position a little bit longer until to see what happens. So in this chart, you could see, so the green is the potential profit areas. The red is the, it goes below the buy point and stop loss area. To give an indication, I'm showing in this way. The number here, 0.83, 4.22, 13.75 are all the reward versus risk ratio. So in the first one, if you aim for this resistance right there, that doesn't give you much risk to reward. So you'll be risking 93 cents to gain 77 cents. So that's 0.83 reward to risk. Whereas if you look for this one here, that's 4.22. So 4 times the risk taken. And on this one, that is 13.75 times the risk taken. So if you risk about $1, you gain nearly $14 for that level of risk. Okay, so I kept the stop loss at the same level for the purpose of this video, to keep it simple. But if you're going for this shorter term risk, 0.77, there is a stop loss that you can adjust as close to the 50-day, just below this red candle, and that will be 1:1 risk reward ratio. Of course, when you're looking for medium to longer term moves, you need to have an appropriate risk level. You can't expect to keep a very short, tight leash for risks and then expect the stock to rocket, despite the name of the stock price to rocket to all-time high without kind of fluctuation. So if you're looking for longer term, of course, you need to allow a bit of a breathing space for the company, for the stock to move up and down a little bit. And this is a reasonable point, I thought, $1 from the current stock price, because it seems to be finding some level of support here. So I'm actively watching. I might add to my trading account as well if it acts really well in the next few days. I also have a position in longer term account as well. DCBO. So there are quite a few lines here. Don't get too worried about it. So this one is the Fibonacci line. I've used it to validate my kind of analysis. So let me take it off for now. Okay, this stock is a Canadian stock, but it was recently introduced to the US market, US stock exchange in December. That's why previously there's not much of volume and the candles look really bizarre. So it only came to proper trading in US from 3rd of December from here. Okay, so only noticed from that. There was a mini base. It broke above, came back all the way down, and even went, I think it tested the previous IPO base right here. So it set up a downward trending trend track, and then it broke above that trend lines with above average volume on this day, the 1st of February. It tries to retest that breakout level, and there were a couple of significant support levels, the T line and the 50 EMA, and it acted as support. It held the support, and then it moved up. So I found this. I initiated position right there, and it's kind of moving up. It is still in a good position. It moved up about 5-6% since the entry point that I noticed, but it is still holding really nice. And I am introducing to this coming week watch list. So if you're buying there, the stop loss could go somewhere below the T line, about 5.3%. And earlier we saw some of the horizontal lines, the Fibonacci levels, and based on that, there is a potential profit target resistant level here at 7.6%. That's 1.4 reward to risks, or the previous high level, which is 21.6%. And you may want to give a little bit of a room for the stock to move around. That would be just below the 50-day line, about 8% risk for 21.6% potential gain if it goes all the way up to the previous high. And that's 2.61% times the risk. So the reward to risk would be 2.6. But considering this is a good company, high growth stock, and if this is setting up a base here, and if it breaks above that base, this previous high, with good, strong bullish candle on high volume, then I anticipate that it can go all the way up to close to $88. But that will be a few weeks, if not months. There's also earnings coming up in about a month and a half. So there's a lot of time before the earnings would be published. So this is giving me a good, convincing signal. I have a position on this one, and I hope it does well for me and for our members as well. So these are the stocks for the forthcoming weeks. Let me go through that briefly with the chart to you again. So they are DCBO, Sedge, BGNY, Tdoc, Hello, Neo, Target, 10x Genomics, Peloton, Crsp, Crisp Therapeutics, Zoom, and Rocket, RKT. That's it. Right. So quite a few stocks. It's a bit long presentation today. Hope it made sense. You saw the names. I hope you've been benefiting from the watch list that we've been publishing. So this is how it's been performing since the watch list inception, mid-December. I'm really grateful that the market has been really strong and our stock selection has been really good. That gave us hands down outperformance of the market, except for 2 weeks ago, which again we are not losing money. It's about zero, but slightly underperform market. But other than that, it's performed really well. Hope this trend continues. Market is extended a little bit. Keep your feet on the ground. Have the right risk management, stop loss, book some partial profits, and continue to grow your wealth. All the best. We also started a Facebook group. Come over there, join that and contribute. We'll have much more interactions there. The Telegram channel doesn't have interaction abilities, but we can use the Facebook for that as well. Hopefully it made sense. Next Saturday, we're having members only 1 hour exclusive Q&As and discussions with me. I look forward to seeing you all there. If you like what you see, please like, share, and comment, and contribute if you like. Let your friends and family know. The more they are in terms of our members, we grow and you grow, and we can also introduce more facilities for the Grow Wealth members as well. So yes, spread the word. I look forward to seeing you soon. Bye-bye.